to ask Nick. There he is. He almost snuck in on us. What's going on, Nick?
Good news, bad news, bad news, good news. We just lost like a point and a half in the ES on the good report that you guys just reported, right?
The
You
housing
said,
numbers look pretty good,
yeah,
and a couple of the housing builders were actually getting bid up here. I just looked quickly in the pre-market. You look at KB Homes, that actually just ticked up to $15.20, which is up over 3%. If I look just quickly at a couple other ones, Lennar was getting bid up a little bit, which is LEN. It's trading up about 1% here right now. So a couple of the home builders catching a bid, but you're right,
so
the S&P future is not really
and
responding.
and look at the rates and bonds. If you look at for example, the TNX and the TLT. So good news means that rates are rising this year. So markets are trading sentiment rather
Right.
than fundamentals, which have been here the same for a while. So, careful what you do. Whatever you do, I noticed that you like drama. You said at least once a week you get caught in drama of some sort.
Oh yeah.
Pre-over.
That's the trader in me. I like drama.
Yeah. Well, sometimes we get bored and we create drama.
That's what it is. You know what? That is the whole problem right there. When we have volatility, when the VIX is up at 20 or 30, I'm all busy, I'm having fun. When the VIX is way down here at 11 or 12 or 13, I get bored and then I create drama and I usually get in trouble.
Yeah. Hopefully it's contained and then you can just chuckle at it.
Well, yeah, that's the key. Don't get too big in
Yeah.
anything. So, exactly.
Exactly.
So, what are you trading here today, Nick? What's on your radar?
I'm still doing the same thing. What I went, last week we had a pretty bullish setup, and we have the same setup here this week. Maybe even so more so this week than last week. Just broadly speaking, technically the SPX could get higher, obviously the SPY. But I'm looking at the fight in the small caps and in Apple. Apple's got a pin of 130 basically. The fight is over 130. And yesterday, it stretched it close to 131, and again in the pre-open today. So it'll be important for the rest of the market because it's a heavyweight, obviously, and also the small caps because they have defined areas that they're fighting over in the IWM and the RUT overnight. Also, there was some positions there that were pretty bullish. So those two pieces are important in my opinion. The small caps because they're a broad basket of stocks, and Apple because it's a heavyweight. So I went long. The credit put spreads very conservative in Apple and the S&P, and they paid. And I booked some profits yesterday. I sat on my hands with regards to initiating new shorts that are higher. So I'm just sitting back to see the conviction with which you're going to pursue this bid up here this week.
Yeah, you mentioned, the better than expected data. Then, oh, well, then interest rates are going to go up. Man, I think it's going to take more than a one-time, move in the housing starts in order to really get things going. I still don't see September. I mean, the September or maybe December, but the TLT is definitely telling you that something's going on. But interesting move.
I'm convinced that it's 2015, the move in rates. I'm absolutely convinced. I'm also convinced it's not June. September would make sense, but they might delay it until December, thinking that it's low volume trading around the holidays. But that probably would be a mistake because it doesn't take much to move markets on low volume. So September would make sense if I was in charge, but I'm not. So there you go. The I think at some point we as in the collective traders were expecting 2015, but then that got baked out somewhat, and then we ran up, and now there this 2 points this morning on a good economic news is just hints at some of it got baked back in that they expected in 2016 rather than 2015. And as far as we don't get any huge surprises, I think we'll all be okay. We'll just continue doing what we're doing, and we'll creep up. And the major disasters won't come unless we have a black swan event of sorts. And overseas, China news, somebody saying that, okay, all the stimulus in China is going to, I don't know if I said this last week or not, but here I'm repeating myself. If, all the stimulus in China is going to spruce up building again or expansion, I don't think so. It's going to spruce up financial expansion. If I was a mogul over there and I had a whole bunch of money to put to work, why would I want to tie it up in real estate when I can get, 3, 4, 5% a week in my stock market? So
Three, four,
Speak
five. Go ahead, Dennis.
I was saying, speaking of overseas, we had Yayo asking yesterday. I don't know if we talked about this. Was Greece? I mean, they obviously keep kicking the can down the road over there. Is this ever going to come to something? Or they're just going to continue to kick the can down the road over there in Greece? Nick, thoughts?
Yeah, Greece is a disaster waiting to happen. You know, they keep saying, yesterday I heard somebody say they kicked the can enough for it to go away. I don't think so. If I want to draw a parallel, when we had the housing debacle here, we had so many people that were underwater. Eventually, they just walk away from their debt. They say, here are the keys. Thank you very much. There's no way I can get out from under this. I'll declare bankruptcy or walk out. And here's your asset. Thank you very much. So the Greece situation will eventually say, if somebody, you can kick the can, but at some point, there's going to be hurt. And those debtors are going to have to take a haircut, in my opinion, for there to be a deal at all. And they have big payments coming up. I think somebody mentioned early June. I thought it was later than June. There was a bigger payment, I thought, in July. But there are some important dates coming up. You can check the schedule on that. But the spirit of it is somebody's going to have to take a haircut. A lot of people do. But the important part is I think most of these people got into the debt after the financial debacle. So they knew they were lending to, quote, a subprime situation, not to call anybody subprime, but that less than ideal credit situation. That's why they were given high rates, in my opinion. So if you lend to somebody who's high risk, your argument saying, oh my gosh, I need my money back, whole, is not as strong as, say, you lend to somebody that surprises you with a bad situation coming up.
Uh, Nick, before we go into some of the movers this morning, I need your help on something here. And Twitter. I'm getting itchy on this thing here. I kind of want to go long it. You had the big drop after earnings. You had the major consolidation here. Obviously, it's setting up for another move. If you were a strict technician, you would say this is a consolidation to go lower here. But I would like to have some exposure on the upside. This really isn't based on like any great technicals. I think it is winding up. It's either going to go to 44 or 33 here, I think, in pretty short order. But want to have some exposure. I just don't want to be, if I go out and buy the July or August or September calls, what do you think here? What would be the best way? I think I'd like to have
Well,
exposure through next earnings season, especially, what if Google comes in here? I mean, just say, to me, based on the numbers, based on its rate of growth, it's a cheap stock.
I agree. Twitter is a good story, I think, in the future because we all use it. A lot of people use it, and the ones that don't should. It's a good resource to catch up on news and also to reach out on subjects in which you're interested. So if you are bullish Twitter, you can use some credit put spreads, or even if you don't mind owning it at 31 or 32, then you sell puts down there. That gives you money with which you can buy calls. But if the price falls below those puts and you're short those puts, then you're committing to, okay, I'm okay owning Twitter at 33. So you can do that. And this way you're long Twitter for almost free because those puts sold will finance your calls. And if Twitter rises, then you're participating to the upside with minimal outlay out of your pocket. I went long Twitter via credit put spreads for June, and they're almost paid out completely. So I did it that way.
What did you
The
do?
calls,
I mean, June's a little bit,
I, I, I sold the credit put spread in June at 32 area. So, and it paid me, what was it, like 11% yield on my maximum risk. The risk was $1 wide, and I collected like 11 cents to do it. It was a no-brainer. Small trade just to participate a little bit without much damage. So let's call it pays for the gas for a couple of weeks. That's how I see it. Every trade I do, okay, I equated this space for that, this space for that, this space for that. It makes it tangible. It makes it easier to manage. It makes it easier to book profits. It makes it easier to make a decision when you need to book loss. So if you reduce it to a tangible action item, for me, that is. So Twitter, yes, I do like it. It seems to be basing around this area. As far as the open interest, I haven't looked at it today, but we can do that right now. It seems like 37 and a half, 37 to 37 and a half is a neutral zone, maybe up to 38, support below and resistance above. So for this week, strictly speaking, for this week.
I got a question for you, Nick, and you've been trading options for a lot of years here. Just do you think the weeklies, having weekly options on all these big caps, just reduces volatility? Because when you get a whole bunch of people working the weeklies there, it holds down, the price, or it can hold up the price and just get stuck. Do you think these weekly options reduce volatility?
I think they create interesting situations. I like them because they give you a plan B. Should you take a position of sorts and you get in trouble with it, or you think, oh my gosh, there was something that delayed the outcome that I was expecting, then you can just roll out into your position into a week later. So I like them, but they might reduce volatility a little bit in the sense that I may be able to take a position and stand the hard line a little longer or harder than I would have before, where I was stuck, where my options are limited. But now my options are so many more with
Yeah.
regards to moving or addressing my situation. Like if I was short somewhere and I wanted to hedge it, I can take a small rental long somewhere else out a week or something in order to let me withstand the heat for a day or two.
All right, let's move on to some of the morning movers here. Walmart getting the beats here. Disappointing the street, trading down $1.92. Is this something that ever pops up on your radar?
It does, and I'm very disappointed with Walmart management for the last, I don't know, year, maybe year and a half, because their stores have gone downhill. And I'm not the snob that never walks into Walmart. I live in an area where Walmarts are nice, relatively speaking, and they have gone downhill with regards to help inside. It's almost impossible to get good help, and the shelves are often half empty. So what's the excuse there? I thought, the founder was a genius merchandiser. I can tell you these stores are not geniusly merchandised. There's a way you can say it that way. So I don't know why I would want to go along it if I don't actually see the performance at the store level improve. And, if you can find it at Walmart, it's going to be the cheapest, and that's the only reason that would drive me to go into a Walmart, whatever I'm buying. Other than that, the experience at Walmart it's gone downhill. And if they're trying to manage a better P&L, I think it starts at the store level, and they need to fix the store situation first.
Okay, moving on, kind of the flip side of things here. Home Depot trading up here, decent earnings. I don't know why they traded this down to 112 here. Now trading up at 116.50.
Mm-hmm.
You had that, the Apple do everything right, the good numbers that sold off. You had kind of a similar thing with Disney. Now you have Home Depot knocking on the door of the all-time high. The all-time high at Home Depot, well, got a little ways to go. 117.99, the all-time closing high, 117.49. What's your take on Home Depot?
I shop there often. I can tell you that. And the markets have had left room up until 115, I think, from the open interest, if I remember correctly, even up to June. So it's going to have resistance at 115, starting at 115, and some support at 110-ish. So it's a decent range-bound trade. Technically speaking, it has bounced nicely off of the 112.5, except for that one little dip a few days ago, not too long ago. So as far as bullish stocks are concerned, this one is well managed, it seems like, and technically it could break out of here. But for me, I because of this disappointment we've seen in so many other stocks you mentioned, I'd want to see a candle or two to tell me, okay, they are committed this time around before I chase anything. I'm very skeptical of all these moves upwards these days, and just based in my theory. I say, oh, yes, we have room for upward movements everywhere, but I don't think we're going to leap up without a new catalyst of some sort. Because the givens right now we know, and they're not changing, and they're not all bullish. So in the midterm, I would say short to midterm. So why are we in all-time highs and threatening to break out to even higher, say 2160 or something like that, 5560 in the SPX, for example, for this week? I don't understand it. So until I see commitment to it, I'm not jumping on that bus. So I just want to see how they trade them after the open today.
Well, Well, speaking of chasing moves here, I got a stock for you, and everybody seems to be chasing this one now is Netflix. And now we've
Oh,
got Pivotal Research coming out this morning. They're raising their price target from 650 to 850. That's good to tack on another 4 points on the Netflix price here this morning, trading up $4.58 here right now at 622.34. What is going to derail this Netflix, or is just the thing just off and just going to continue to go up forever?
you cannot short Netflix. When we had the major moves on earnings from Netflix, it was based on fundamentals. And then the
Mhm.
fundamental story came back, global growth. That was why we were buying Netflix from, say, the low 100s just a couple of years ago. So that was the idea. For a period of time, because of Amazon sympathy moves when they shellacked Amazon, Netflix got shellacked a little bit, but then the idea got rebirthed because they're showing global growth. And then the China news comes out and forget about it. You cannot short this. Remember when it was up, I said, oh, it might be 575 by this week or today. I joked when I was on your show after the earnings. And the joke is no longer a joke because here we are over 600. And I wouldn't short it. Technically, it's in a breakout on top of a breakout. So 700 is very feasible in a very short period of time, technically speaking, for Netflix, especially that it has fundamentals behind it. So if you want a flyer on a cheap debit call spread or something, or calls, that would be it, or call calendar or whatever, however you trade long positions, that would make a nice lottery position there. And I would not short it at all in any way, shape, or form. I would be wasting my money, in my opinion.
700 seems to be the number. We had JC Peretz on last week talking that it
No.
could go to 700. We got Nic Chahine saying 700. We got SF Bright from our
Oh
chat room
no!
saying
Don't put
700.
me. No, I love the fact that I'm being mentioned with these technical guys that know what they're doing. But mine is more of a crayon thing. So
The crayon, that
so
seems
my
to be.
crayon is pretty fat on a small chart. So 700 could be like 725 or 675. So, but it served me well. But the idea is I wouldn't short it, and it has a lot of potential because it is a technical breakout that is supported by fundamentals. A global growth, you can't argue with it, especially when it comes to China. I mean, I don't know how big of a market in China is, but I'm going to go out on a limb and say it's the biggest as far as count. So it is an important opportunity for them to pursue.
One
Nick,
more,
one more.
one more for you here, Nick. Urban Outfitters getting the beats today. Retailers. I know I've never really heard you talk about retailers, and I'm sure they're on your radar or not. But
Ooh,
looking for
what
URBN getting the beats here. Boy, it sure looks like it's just look at this one purely technical for us. I just think it's kind of find a little support here.
Well, it's I don't track it, but it moves a lot for
Little
I don't know.
violent one, yeah.
Yeah, I mean it had an incredible run from 28 to 47, and it looked like it was basing around 39. But if it's getting the beat down now, I'm not sure I'm convinced to chase it here. Um, I'm not a retail expert, but if I'm looking at a chart like that, and it's almost like a 50-50 coin flip here, and I don't know, I would have to go to, let's see, the open interest if I can quickly look at it, and if I can give me some clues. It looks like there should be resistance starting at 40, more so at 41, and some support, smaller support at 40. So it looks like 40 to 41 is what the open interest for June is, where the range should be for that. Uh, so I really have no reason to chase it any which way or another. But if I was flipping a coin, I'll probably take put spreads in it.
Okay. All right. We've been on the line with Nic Chahine. He's a Marketfy Maven, the author of Create Income with Option Spreads. Nick, thanks for your good view of the market. We'll talk to you again next week.
Thank you so much.
Thanks,
Hey,
Nick.